Okay, so we're looking at Jassie Co. So let's get right into it. Jassie Co operates in the oil and gas industry. The current financial year end of Jassie Co is 31st of December 2007. Now, the following exhibits available below provide information relevant to the question. So we have granting of licenses. We're only going to focus on this part of the question because we are doing IFRS 15. So, granting of licenses. Jassie Go provides services to customers to help them evaluate whether there are potential oil reserves in a particular geographical location. Customers generally enter into the contract before the survey process commences and eventually purchase a license to search for oil deposits. So, in this case, they enter into the contract and approve of the contract before the survey process commences. Now, service phase. So during the service phase, Jassie Co collects site data over the first year of the contract, then processes and analyzes the data over the next 6 months. So the area surveyed is determined by Jassie Co, who is the only decision maker and the owner of both the data and the land surveyed. All of the data is made available to customers in the final survey report. Customers cannot process the data or obtain a license other than by Jassie Co's approval. So it means that the customers cannot process this data on their own or obtain a license on their own other than by Jassie Co's approval. That means it indicates that they cannot benefit off of the data by themselves. They need the help of Jassie Co. So it points to the fact that this is not a distinct obligation or distinct good or service. Right? So the value to the customer is in the granting of the license and not in the data. So their main focus is that we need the license. We need this license granted. So that is their entire reason for contracting. So as data is being collected and processed, presentations and reports are given to customers to indicate the potential of an area. Customers have ongoing access to the data during collection and processing. When the final report is made available, the customer decides whether to invest in the area. Granting of license. So the customers can exit the contract on receipt of the report, but the total price of the contract, including the price of the final license, is still payable to Jassie Co. So this is another indication that even if customers decide that we're not going to invest in this area, they still have to pay for the total price of the contract, that is also the license, which again indicates that this is not a distinct good or service, that the service phase cannot be used on its own. It is not separately identifiable. It comes with a license. So in practice, no customer usually leaves the contract at this stage. The license is granted at this stage, and once the license has been granted, there is no further analysis or service provided to the customer. So the directors of Jassie Co concluded that the company has only one performance obligation, being the granting of a license at the end of a survey. This is because the collection and processing of the data is a component of the granting of the license and it cannot be distinguished from license. In addition, the service phase alone is of no benefit on its own, which again is an indication that it is not a distinct good of service, right? So the final license provided to the customer is based upon the data collected and processed during the service phase. So the question is discuss whether revenue from the service phase and the grant of a license to a customer are separate performance obligations or a single performance obligation, and whether the revenue should be recognized at a point in time in accordance with IFRS 15, revenue from contracts with customers. So when we start answering, we'll start with applying the concept and defining what a performance obligation is, right? So under IFRS 15, revenue from contracts with customers A performance obligation is a promise to transfer to a customer goods or services or a bundle of goods or services which are distinct in exchange for consideration. Now, how do we know if a good or service is distinct? There are two terms to it. So, either a customer can benefit from the good or service alone or on its own or together with the available resources. So, either they can, so for example, if this service phase was a distinct good or service, then the customer could only pay for that, right? They could only pay for the analyzing and the collection of data, and then they could take that data and process it on its own with their available resources. But in this question, it says customers cannot process the data or obtain a license other than by Jassie course group. So it doesn't fit into this criteria. The second is if the goods or services are separately identifiable from other goods or services within the contract. It is not separately identifiable because we cannot put a separate price to the service phase. Because it says the customers can exit the contract on receipt of the report, but the total price of the contract, including the price of the final license, is still payable. So they have to pay for both the service and the license, whether they take it or not. So it is an indication that it is not separately identifiable. So some factors that determine a good is distinct. It is not integrated with other goods or services. In this case, it is the service phase is integrated with granting of a license. It does not significantly modify other goods or services. Again, in this case, it is significant to the fact of whether the land is something they can invest in or not, and it does not depend on other goods or services. So again, in this case, the license depends on the data collected. So if a good or service is not distinct, then it should be combined with other goods or services within the contract until they become distinct together, forming a bundle which is treated as a single performance obligation. So as mentioned above, the case of Jassie code, since does depend on the extraction and analysis of the data collected during the service phase. Therefore, it is not a distinct obligation. It forms part of the license and therefore it is a separate performance obligation. As mentioned in the case, the service phase alone is of no benefit on its own. The final license provided to the customer is based upon the data collected and processed during the service phase. Now, whether the revenue should be recognized at a point in time in accordance with IFRS 15. So, the service phase is useless on its own, right? There is no benefit from it by itself. So, the final license provided to the customer is based upon the data collected. So, it forms one single performance obligation, and secondly, that is the performance. So, they say that revenue should be recognized when the performance obligations are satisfied. So in this case, once a license is granted, that is when the performance obligation is satisfied, because they do not provide where is it, yeah, so the license is granted and there is no further analysis or service provided. That means this is the end of the contract, end of the performance obligation being satisfied. So in this case, revenue is recognized at a point in time, that is when the license is granted.